Are high taxes in states like California and New York holding you back from starting your dream business? In this video, we're going to show you how forming an LLC in these states can solve this problem and also give you access to some of the biggest markets in the country. Now, I know what you're thinking. Isn't forming an LLC in a high tax state just asking for trouble? You're worried about bigger tax bill and more paperwork, right? These are totally valid concerns, and a lot of entrepreneurs feel the same way. But here's the thing. If you avoid these states, you might be missing out on huge opportunities. Think about it. California and New York have some of the biggest markets in the US. So what if I told you there's a way to tap into these markets without getting crushed by taxes? In this video, we're going to cover some awesome tax strategies, how to protect your personal assets, and ways to make the most of these big markets. So stick around because this could be a game changer for your business dreams. And to help you get started, I've put together a free LLC guide that you can download now at llcblueprint.com/free guide. Plus, if you're ready to set up your LLC, I highly recommend Northwest Registered Agents. They'll handle everything for you for just $39. And for your convenience, I put all the links down in the description of this video. So go ahead and check them out. Now, before we move on, please know that I earn a small commission if you shop through my links. It doesn't cost you anything extra and it helps me support my channel. And with that in mind, let's get started. All right, let's dive into those tax strategies. You know how everyone says that you can't escape taxes? Well, that's not entirely true. There's a little known approach that savvy business owners use to significantly reduce their tax burden, even in states known for high taxes. Want to know what it is? It's called pass-through taxation, and it's a game changer for LLC owners. Here's how it works. Instead of your business profits being taxed at both the corporate and individual levels, they're only reported on your personal tax return. This means you're avoiding double taxation, which can lead to some serious savings. But that's not all. There is another strategy that can take your tax savings to the next level: electing S corporation status for your LLC. Now, I know that sounds like a mouthful of legal jargon, but stay with me because this is where things get really interesting. You see, when you elect S corporation status, you can pay yourself a reasonable salary and then take the rest of the profits as distributions. Why does this matter? Well, those distributions aren't subject to self-employment taxes. That means you're potentially saving a chunk of change on taxes you'd otherwise have to pay. Now, let's talk about maximizing tax deductions. This is where a lot of new business owners leave money on the table. As an LLC owner, you can deduct a whole range of business expenses. We're talking office rents, utilities, business supplies, even health insurance premiums, and business travel. All these deductions can significantly reduce your taxable income. But here's the catch. The flexibility in profit distribution for LLCs allows you to allocate profits in a way that makes sense for your business. This can be a powerful tool for minimizing your tax burden. Let's break this down with a simple example. Say you've got an LLC with two members. One member puts in more work hours while the other contributed more capital. With an LLC, you can distribute profits in a way that reflects this uneven contribution rather than being forced into a rigid 50-50 split. This flexibility can lead to significant tax savings when done right. Now, I know what you might be thinking. This all sounds great, but is it really worth the hassle of forming an LLC in a high tax state? The answer is it absolutely can be. These strategies can lead to substantial tax savings, making high tax states much more viable for your business. Think about it this way. Yes, the state tax rate might be higher, but if you're able to significantly reduce your overall taxable income through these strategies, you could end up paying less in taxes than you would in a lower tax state without these benefits. Plus, remember those big markets we talked about earlier? By setting up shop in states like California or New York, you're positioning yourself to tap into some of the most lucrative markets in the country. When you combine that potential for higher revenue with these tax-saving strategies, suddenly those high-tax states start looking a lot more attractive. Now, implementing these strategies correctly requires some know-how. It's not just about forming an LLC and calling it a day. you need to understand how to structure your business, how to properly categorize your expenses, and how to navigate the sometimes complex world of business taxes. That's why it's crucial to work with professionals who understand these ins and outs. They can help you set up your LLC in a way that maximizes these tax benefits while ensuring you're fully compliant with all state and federal regulations. Okay, let's talk about something that keeps many business owners up at night: the fear of losing everything if their venture doesn't pan out. What if I told you there's a way to run your business in a high tax state that not only saves you money, but also protects your personal assets? It's a strategy that many successful entrepreneurs use, but few talk about openly. I'm talking about limited liability protection, and it's one of the biggest perks of forming an LLC. This is especially crucial if you're in a high-risk industry. Here's how it works. When you form an LLC, you're creating a separate legal entity for your business. This means your personal assets like your home, car, and savings are kept separate from your business debts and liabilities. Think about it this way. Let's say you're running a construction company in New York. One day, despite your best efforts, there's an accident on one of your job sites. Without an LLC, you could be personally liable for any damages or lawsuits. That means your personal savings, your home, even your kids' college fund could be at risk. But with an LLC, your personal assets are shielded. The business might take a hit, sure, but you won't lose everything you worked so hard for. This protection becomes even more valuable in high-tax states. Why? Well, these states often have more complex business environments and can be more prone to lawsuits. By forming an LLC, you're adding an extra layer of protection between your personal finances and your business risks. Now, here's a strategy that's particularly useful if you're planning to expand your business across multiple locations: forming separate LLCs or using a series LLC. This approach allows you to compartmentalize risk. If one location faces legal issues or financial trouble, it won't necessarily impact the others. It's like having multiple shields instead of just one. All these protections add up to one big benefit: peace of mind. When you're running a business, especially in a high-tax state with a complex business environment, there are a lot of things to worry about. But with an LLC, you can focus on growing your business without constantly fretting about losing everything if something goes wrong. Okay, so now that we've covered protection, let's talk about potential. Ever wonder why some of the biggest companies choose to operate in states with sky-high taxes? There's a surprising reason, and it could be the key to unlocking massive opportunities for your business. When you think of states like California and New York, what comes to your mind? Sure, high taxes might be at the top of the list, but have you considered the incredible markets these states offer? We're talking about access to millions of potential customers, diverse industries, and some of the most innovative business environments in the country. Let's take California as an example. It's not just about Silicon Valley and tech startups. California's economy is larger than most countries, offering a huge customer base across various sectors. From agriculture to entertainment, there's a market for almost every type of business. In New York, it's not called the financial capital of the world for nothing. The opportunities for networking and partnerships in cities like New York are unparalleled. But here's where it gets really interesting. These high-tax states often offer some pretty sweet incentives to offset those higher rates. Take California, for instance. They've got tax credits for small businesses that hire veterans, invest in green technology, or engage in research and development. These credits can significantly reduce your tax bill, helping to balance out those higher rates. New York's got tricks too. They offer credits for hiring disadvantaged workers and investing in new technology. So while you might be paying more in taxes up front, you could be saving big in other areas. Even New Jersey, which is known for its high tax rates, has some hidden advantages. It's strategically located near major cities like New York and Philadelphia, giving you access to multiple large markets. Plus, they offer tax incentives for job creation. So if you're planning to grow your team, you could see some significant tax benefits. Now, you might be thinking, okay, but are these incentives really worth the higher tax rates? In many cases, yes. These specific tax credits and business incentives can actually mitigate the impact of those higher rates. This means you might end up with more money to reinvest in your business than you would in a lower tax state without these benefits. Here's a simple example. Say you start a small tech company in California. You hire a couple of veterans, invest in some green tech for your office, and spend money on R&D. Suddenly, you're eligible for multiple tax credits. These credits could potentially offset a significant portion of your state tax bill, leaving you with more capital to grow your business. But it's not just about the tax savings. Operating in these states puts you in the heart of innovation and industry. You're surrounded by potential partners, investors, and a talented workforce. This environment can spark new ideas, lead to valuable connections, and drive your business forward in ways that might not be possible in smaller markets. Think about it this way. Would you rather have a bigger slice of a small pie or a smaller slice of a massive pie? In high tax states, you might be paying more in taxes, but you're also tapping into much larger markets and opportunities. The potential for growth and success could far outweigh the higher tax rates. Of course, every business is different, and what works for one might not work for another. That's why it's crucial to do your research and consult with professionals who understand the ins and outs of these state-specific incentives. They can help you navigate the complexities and make sure you're taking full advantage of every benefit available to you. So, let's talk about taking action. Now that you know the benefits of forming an LLC in high tax states, it's time to get started. But here's the thing, navigating state-specific laws can be tricky. That's why working with tax professionals is so important. They'll help you make sure you're doing everything by the book and maximizing your tax strategies. Now, if you're ready to form your LLC, I've got a recommendation for you. Northwest Registered Agents is a trusted service that can handle all the paperwork and compliance stuff for you. They'll make sure everything is set up right so you can focus on growing your business. And here's the best part. If you use my link down in the description of this video, you can form your LLC for just $39. It's a great deal for the reassurance and professional assistance you will get. So, why wait? Click that link and start your business journey today. I hope this video was helpful. Thank you so much for watching. Till next time.